Hello and welcome. We are coming to you from the BSE, the Bombay Stock Exchange. Over the last couple of years, we've seen droves of new investors, millions and millions of new investors coming to the market. But we're also seeing new mutual fund managers, not really new, who've been around for decades, but in a new avatar now coming to the market. I'm sitting down with two such gentlemen. Samir Arora is founder of Helios Capital. Dinshaw Irani is CEO at Helios Mutual Fund. Guys, hi. Great to have both of you here. Thanks very much.
Thank you.
Tell us a little bit about the fund. I mean, this is not a new business for you in that sense.
First of all, we are not businessmen. We are fund managers.
Right.
And this is just one more avenue to offer the fund management that we have done for so long and quite reasonably well. And when I was in Alliance, I was their first employee, and I was more or less the first employee of any company in this business in '93. So I totally enjoyed that first stint, and I wanted to relive that. And over the last few weeks, I've been traveling all over India. Like this week is my 5th different city: Cochin, Bangalore, Pune, Surat, and today Mumbai. And this week, it is too exhilarating, too much fun.
There was an article in Money Control, Samir, which said the OG of fund management. For those who don't know what OG is, original.
No, even I didn't know it. I checked what OG means. It means original gangster. Even I didn't know what OG means.
Yeah. But you were you were the first, in a way, rock star fund manager. I mean, otherwise, I mean, a fund is a fund.
I'm too humble to say rock star. I accept.
In a sense, you're publicly known, right?
Yeah, it was a good performance, and we became number one in those days in Alliance.
Yeah.
While we were competing with all the big daddies of India with big partners,
yeah.
Whereas Alliance was 100% foreign owned in that sense. So yeah, those were great days.
So plans to repeat it?
We hope to relive that whole experience, but who knows how it goes.
A lot of time has passed though, right? I mean, between that and now. And the market has changed, everything has changed. Although returns have been very steady here in India. So that gives you comfort. That gives all of us comfort.
What gives comfort also is our own, that we've also for 18, 20 years been doing India. Dinshaw has been with me since 2005.
Correct.
The rest of our team, the senior guys have all been there from, if not 2005, although one has been our CIO. Our head of research has been there from 2007. So basically the whole team has not just coming back after 2005. We've been running other
Your
things.
partnership is what, 2 decades old, right?
Yeah.
And Dinshaw, congratulations. You started with Samir back in the day as an analyst?
Yes.
Covering what sector? And
in 2000, I joined Alliance Capital as an analyst for consumers and pharmaceuticals for emerging Asia.
Right.
But even prior to that, I knew him from '94 because I used to run a boutique research house where I was the head of research, and I used to service him because he was the biggest fund manager in the country at that point in time.
Right.
So
what are plans? What are learnings? Because as Samir said, you guys have been active over all these years.
So with this man, one, you can't stop smiling. Okay, he's always smiling and laughing because he's a very good person to work with. He does lose his temper, but there's very less and far in between. So
the market, not about me.
And plus, you keep learning a lot from this change.
Yesterday we were in Surat, and somebody told us that the tagline should be "Haste invest karo."
So, it's not a bad tagline.
But
so one thing I've learned is that you should never first decide what you want to buy.
Yeah.
You need to first decide what you want to avoid. Because purely by doing that, you cut out a lot of clutter. And that, we've termed it as elimination investing. It's called EI, powered by EI, by the way. That's what we call it.
Not AI.
Not EI. Yeah. And the concept is very simple. It's you know what is bad. Because bad has a definition, good does not. If I tell you a man steals, he is bad. But if I tell you he doesn't steal, doesn't mean that he's good. He may have certain other flaws, right? So when you look at companies and you see these underperformers, you know that this company didn't do well because it was overvalued. It didn't do well because the promoter has not a good background. It didn't do well because the industry theme is not right? So we have these 8 parameters on which we reject stocks, right? And any one single parameter is enough for us to reject. In fact, just to tell you, I mean, we start off with the industry theme and we end with valuation. So valuation comes right at the end. We don't get carried away by a value trap. A stock is cheap because of a reason, right? So that's why we keep valuation at the end. So once you do that, say when we started off in 2005, we put NSE 500 through this ringer and or funnel or sieve or whatever you want to call it. And at the end, we were left with some 100 stocks. Now, can you imagine the clutter that was taken away from the manager's mind? He now doesn't have to decide whether he wants to buy value or growth.
So the
or
investable universe is for Helios is 100.
No.
Yeah.
That was then I'm
Okay,
talking
that was then.
about.
Okay.
So any new idea which comes in, any new IPO which comes in, they come through this sieve only.
So one more, just to explain further, is basically we are saying some companies we say will not buy. That might be more or less half the universe. Then you have left with, say, 250, 300 companies right now in our current model, out of which some 100 you will say will not buy now because they are very expensive.
Right.
So those can change over time because either the growth rates can change or the valuations can fall, or by not falling or not moving up, they can come in line. Then you're left with about, say, 100, 125 companies where they cannot be rejected on any of these 8 factors. And then we'll search for the good. But first thing is remove any excuse that a stock which can lead to a stock doing badly.
Tell us a little bit about the fund itself, Dinshaw. I mean, what is the strength of the fund? How many research sort of analysts, and just a little bit about the fund itself.
So one thing that we've done is we kept everything separate. Like Samir's advisory is separate. The alternate part of the business, which is AIF and PMS, we have a separate team for that. Mutual fund obviously will be a separate team. However, what we kept common is the research, because that's where our strength is and that's where we want to focus on. So the research also has a very clear mandate that they cannot have a buy, hold and sell. They have to have 1, 2, 3 rating. 1 is better than 2 and 2 is better than 3. So that also takes away a lot of pressure from the manager that I cannot buy a sell stock, right? But 3 rated, if I know that relatively it's going to do better, so I'm giving that leeway to the manager also. So that's how it is. And the whole overall the team is around 12 odd people who are into investments and
on the investing side, and of course a much larger team otherwise.
You have 62 people in India now.
Okay, and hiring or
hiring, but in sales and all.
and sales.
And maybe someday more research guys when we go into mid-cap fund, small-cap fund right now.
You've been, as you called it, on a Bharat Darshan trip. What's the feedback like, and what do you? It's always interesting to travel and meet people, and
So you were there yesterday. And you saw the response. Hopefully, it'll be good. But more than the thing is the wealth creation in the country has been enormous. Number one. Second is the traveling via trains and via planes has become very, very different from what. Although I've been traveling a lot anyway because I always travel for research, but not so intensively. The intensive part is that you are still on schedule. That is what the intensive was being, other than tiring you a little bit. But that way the infrastructure is really different from what somebody else may think. And I did not experience it with this intensity. But it's brilliant that way. So it is a big delta from whatever time you may have started. And so other thing is that in Surat we saw how many people are making how much money and what businesses and saris or whatever, and it was serious wealth creation in many of these places. Pune I saw, everywhere more.
We'll take a quick commercial break, but we are right back with Samir and Dinshaw on the other side.